Welcome. I'm Mark Kerrigan, author of a best-selling book on Bitcoin, The Bitcoin Tutor. I've been helping people since 2014 to get invested in Bitcoin and to do it safely. Today, let's talk about crypto taxes. I know it's tax season in most of the world right now, and reporting on your earnings in 2017 is probably due, and the tax as well. So first, I'm not a tax consultant. My advice is to hire someone who is qualified in your jurisdiction to help you comply with the law. Now, crypto laws vary, yet most jurisdictions treat them as assets or property. That means that capital gains laws, short-term and long-term, are involved in the tax calculation. Now, in many jurisdictions, let's start with the US, short-term is less than a year and long-term is more than a year. And usually in most jurisdictions, there's some kind of differentiation as well that's similar to that. Now, short-term rates can be as high as your normal income rates. And in the US, that can be nearly 40%. In other parts of the world, even higher. Short-term rates could be as high as 20 to 25%. And in some jurisdictions, it's zero. There's some lucky places in Europe that don't pay long-term capital gains. So what are the transactions you need to report for cryptos? Well, first of all, there are four basic kinds of transactions that you could report or that can occur. Let's start that way. So the four basic transactions that can occur in cryptos are buying, selling, sending, and receiving. Pretty basic. Now, for those to be tracked, that allows you then to, at tax time, report everything that's occurred. Now, the items that really need to be tracked especially are the buys and the sells. If you're sending currency, cryptos between your own wallets, that probably does need to be tracked. If you're sending cryptos to someone else as a gift or in payment, that does need to be tracked as well, because that is considered a sale as well. So really what most governments care about is sales. And what they care about is what did you buy it for, what did you sell it for, and what is the difference. Now, to do that, you need to keep good records because you need to track the cost basis. And the cost basis is really the fair market value, or in most cases, what you paid for the crypto. So for example, if you took US dollars and bought Bitcoin, you need to record the date, where you bought it, and how much you bought, and what was the price per Bitcoin, and what was the total amount you spent. Now, in many cases, there may also be fees, so you want to track those too, because those often get deducted from your tax. So, for example, I have a good example here. If you were to buy a tenth of a Bitcoin when it was trading for $10,000, then your 1/10 of a Bitcoin would be worth $1,000. Then you record the date and the fees paid for that $1,000 investment. Now, buying cryptocurrencies don't usually trigger taxes, although tax regulations do require you to track this information for when you do sell it later. So what constitutes a sale? Now, this is an area that's really important because a sale is not simply selling for US dollars or euros or pounds or yuan. Selling means anytime you dispose or get rid of a particular crypto. So for example, if you take a Bitcoin and you exchange it for a Litecoin, you have effectively sold a Bitcoin and bought a Litecoin in most jurisdictions. And that would be at the current market value for that currency, for both currencies. And that'll be in whatever your taxable currency is, your fiat currency, whether it's dollars, euros, or something else. Another way to sell, obviously, is if you're selling back for fiat currency, of course, that's obviously a sale. Now, if you're gifting a currency, let's say you're giving someone a Litecoin as a gift, well, you need to actually consider that a sale of the Litecoin at the price, the current price at the time you make the gift, and then you are gifting at that higher rate. So, for example, if you bought a Litecoin for $150, and you're gifting at the time that it's $250. Well, you've now earned $100, and you have to claim that $100 a gain as a capital gain at the time that you gift now that $250 worth of Litecoin to someone. Finally, the idea of using the cryptocurrency as a currency, most governments don't actually honor the use of cryptos as currencies. They treat it like you're using gold or silver or oil to buy something, which is obviously very cumbersome. Well, they make it very cumbersome to report as well. So if you spend $10 buying something online with Bitcoin, you actually have to then show that you sold the Bitcoin, $10 worth of Bitcoin, for whatever you bought it for. So if you bought it for $5, so there's a $5 gain, and then you have that transaction. Then at that point, it basically turns into currency once you've paid off the property tax on it. So it's pretty confusing, which is again why I recommend that you bring in an expert to help you with this. And this is really just to give you some ideas about what to think about when you're doing your tracking and what questions that you might want to start asking your tax accountant. So let me give you one more example here. So let's say you wanted to buy Ethereum, which is very common right now as a currency that people use to buy something else. So let's say you wanted to buy Ethereum with US dollars, and then you wanted to exchange it somewhere else for a Litecoin. So let me show you the number of transactions that are here. So first of all, the first transaction is buying the 1 Ethereum for US dollars. Of course, you have to track that, even if it's not a sale, because in the future, you will then refer back to your buy price. Also, there's a transfer, typically of 1 Ethereum to the exchange where you can buy your Litecoin. Now, that exchange also includes a cost, a transfer fee. So there's usually a fee involved with that. And then you exchange that, whatever Ethereum is left, let's say it's 0.99 Ethereum actually made it there after fees. And then you're going to exchange that for Litecoin or whatever your currency is. That is a sale of the Ethereum. So if the Ethereum's gone up during that time period, you'll also have to claim that gain on Ethereum before you buy your Litecoin or whatever that other currency is. And of course, then you'll have to track that Litecoin purchase as a new buy at the current market price in dollars, euros, or pounds. So it's quite a bit of accounting. Now, there are tools online that can assist you with starting to make sense of this. So I advise you to take a look at some of those. I'll actually list one below the video that offers a free subscription if you're a modest trader, and if you're a heavy trader, then there's some paid subscription opportunities. Another thing to keep in mind of is that most of the tax authorities now are expecting you to use Fifo Tax Reporting, and that stands for First In, First Out, FIFO. That means if you bought a Bitcoin 2 years ago for $1,000 and you sold it today for $10,000, and let's say you bought another Bitcoin for $5,000 in between, you have to go back to the first Bitcoin, the earliest Bitcoin that you haven't yet sold. So you would have to claim $9,000 now, the difference between the $1,000 purchase and the $10,000 sale. And you couldn't selectively say, well, I don't want to recognize all that tax this year. I actually just want to say that I sold the $5,000 one that I bought in between. Most tax authorities are not allowing that anymore, certainly not in the US. So with all that, as you can see, there's a lot to keep in mind here. One final thought about all of this, especially for the US, with the FATCA rules, the Foreign Account Tax Compliance Act, which is an act that reaches very far and wide across the world for US citizens and residents. If you hold $10,000 or more in a foreign account in currency or in equivalent value, you also have to report that on your taxes in the US. So imagine this, if you have some currency, some cryptos at an exchange that is not in the US, and most of them are not, and the equivalent value in your home currency, in US dollars, is worth more than $10,000, not only do you have to report the buys and sales, or the sales in particular for the tax recording, but you also have to report to the US government what was the amount held offshore. What was the amount held in equivalent US dollar value? So again, this is another reason why getting some professional tax help will be very valuable for you. So if you do need a reference, I do have a company listed below as well that can assist you in your crypto taxes. I found their fees to be fair. I've used their service. and they seem to know Kryptos. So I do recommend them, and feel free to click on the link and see if that's a company that you would like to work with as well. I have one final set of things to think about. A lot of people are thinking, well, you know, it's blockchain, it's Bitcoin, it's a security or privacy coin. How in the world are taxing authorities going to find out? Well, they are finding out. And they're finding out using old methods and new methods. For example, in the US, the IRS filed a lawsuit against Coinbase several months ago. And no surprise, Coinbase lost. They had to supply all account holders, all their names and all the transactions to the IRS for everyone who held accounts from 2013 on. And there was a certain range and certain threshold. But basically, if you did any trading at Coinbase starting in 2013 or beyond, you could have been one of the people who got reported to the IRS, including all your wallet addresses, all of your transactions. What's more, now that the government has that, imagine that they've now hired a blockchain analysis company called Chainalysis. And Chainalysis is creating tools and doing research on all the blockchains for cryptos, certainly presumably starting with the biggest valued ones like Bitcoin, and providing this information and this tool set to the IRS to help them do the analysis and figure out whose funds are whose. So good advice here, you know, pay your due, and don't assume that just because it's blockchain that people don't know that it's you. Remember, Bitcoin is not anonymous, it's pseudonymous, meaning that there are the equivalent of account IDs, which are our public Bitcoin keys, Bitcoin addresses that are in the blockchain. Of course, the private keys are not there. But with those public addresses, those wallet addresses, a chain of activity can be tracked throughout the entire blockchain. From the origin block, you can see every single transaction that has occurred. And every time new Bitcoins are mined, you can see how those Bitcoins transfer throughout the system. So it's really not advised to do anything but try to follow the rules on this. So remember, again, I'm not a tax consultant. I'm not judging whether these rules are fair or not fair, but what I am telling you that these rules are now in place. The tools to research your activity are in place or getting in place. And really my advice is to hire someone to help you get the right information, and to really take this information that I'm presenting today and think about what are your best options and what are the questions that you really want to ask your tax consultant. I'd also add that really now is the time to get pretty serious if you haven't already. In the US, especially in 2017 with the big run-up in Bitcoin and cryptos, a lot of traders have found that their frequent trading has exposed them to gains they were unaware of, and gains they really just reinvested in the market. Some traders have gains of $100,000 or more, and these aren't even the biggest traders. And for many of them, they don't have that $100,000 aside or some percentage of it to pay taxes. So it's very important to keep that in mind in the future as well as you do active trading, to really put some fiat money aside for the tax man. So I hope this video was helpful in understanding the new reality of taxation for cryptocurrencies in the US and in much of the world. If you're a US resident or citizen, I provided 2 additional links below that provides you direct access to the IRS site with the only 2 documents they've ever produced on digital currencies, which they call virtual currencies. This applies to Bitcoin and all the other cryptocurrencies that you may be trading and may have traded as well. So this is very useful information. You can read it directly from the IRS, what they have produced to help guide taxpayers to do the right thing. So thanks for joining me in this video. If you liked it, please support the channel by clicking like and subscribing. Also, I'm pleased to review all your comments and respond to your questions as well as soon as I can. I'm Mark Kerrigan, founder of the Bitcoin Tutor. Remember to keep learning about Bitcoin and cryptos and profit from the knowledge.